Let's bring in Carole Nakhle now. She's CEO of Crystal Energy, joining us live from London. And Carole, I have to begin on some news that we've seen out in the past 24 hours with regards to the anti-OPEC. Mario Draghi suggesting some kind of oil buyers cartel. As off-piste as it sounds, do you think it's going to stand up in this environment? And what's the motivation here?
Good morning, Dan. Well, look, I had to laugh when I read the headline news about this kind of proposition, because really you are either against cartel or for cartel. So you cannot attack a cartel by creating another cartel. And it's just an idea, and God knows what the details and the complexity in terms of implementation. So I doubt it's going to fly beyond the headline news that we saw recently. And the main driver is just to show that the governments in Europe, in the US, are trying to do something to fight higher prices by blaming them on OPEC. Now, of course, OPEC plays a role, but there are other market fundamentals plus geopolitics that are contributing to the rise in price we are seeing. So it's not just really a cartel fighting another cartel.
Carole, I thought it was absolutely fascinating as well. I was on stage this week with the Saudi and UAE energy ministers, and I asked about the NOPEC bill making headway in the United States. The response from them was OPEC is not a political organization. It exists to ensure market stability. And they said, basically, trust us. We look at the numbers each month. We have the mechanisms in place to be able to manage this market. And if you didn't have an organization like OPEC existing as it does, we would see oil prices following in the footsteps of other major commodities like gas, for example, where we have seen prices skyrocket. But do you think it's different this time, particularly because of the political considerations in the United States and, of course, the pressure that OPEC is under to act in order to bring prices down? NOPEC legislation in the US, where's it going?
Well, look, what is different this time? It's not really much different from previous episodes of high prices, because if you notice, the NOPEC bill emerges when we have high prices and then it disappears when there are low prices. So this tells you there is a political motivation behind the bill itself, and it's a kind of exercising pressure on OPEC to release more barrels in the market, a call that OPEC has been resisting even from last year before the prices hit the levels we are seeing today. Now, I doubt it's going to fly too far, because this bill has been pushed over many years, if not decades. And of course, it doesn't get the endorsement and the signature of the US president, irrespective whether you had a Democrat or a Republican in office. So it really doesn't get too far. It will have major repercussions, because even if you say there are tensions between the US and Saudi Arabia, but OPEC is much more than Saudi Arabia, and that will have many repercussions on the economic trade, on oil markets, and of course on the geopolitics and political relationship between the US and various OPEC members.
Carole, I also wanted to ask you about the ban in Europe on Russian oil, likely coming soon. We've already seen the United States, the UK, Japan, all banning Russian imports. How will OPEC Plus respond to that ban when it indeed takes place? And what do you see as implications for the market broadly as a result?
Well, it depends. In terms of OPEC Plus reaction, first of all, it depends on when will that oil embargo, the sanctioning of Russian oil by the EU, which has been discussed for a while, but of course is getting closer to being implemented. But first of all, we have to see when it will be effective, because it seems to be most likely, if it's approved now and endorsed by all country members, then it is going to be effective by the end of the year. And OPEC will wait and see how market fundamentals will look like, because mind you, we're already seeing downgrades to oil demand. We are seeing more supplies coming to the market. So maybe OPEC will not need to do anything by the end of the year. Second, we have to see the scope of those the embargo and the sanctions, if they get approved and endorsed by all EU countries, and what conditions, because there are talks that some countries are going to get some exemptions and waivers. And if one country gets a waiver, another country will seek for another waiver. And that by itself will weaken the impact of the sanctions and thereby will limit their implications on oil markets and prices. But in a nutshell, we're likely to see a reallocation of trade flow, a reorganization of trade flow, because half of the world, including the world's largest importers, China and India, have not sanctioned Russian oil. And that is key in terms of effectiveness and implementations of the sanctions on Russian oil on oil markets.